Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, morning.
Hi, morning.
Hi, morning. 24 hours have passed since the ceasefire, and it's very, very fragile, right?
Well, that's right. So I think we get back to tracking fundamentals, and top of mind will be the results that start of today. TCS, Reema, you've got a long day.
Long day, yeah. And crude prices.
Prices, which is, I think if you remember the Ukraine, there was a ceasefire, but I mean, when negotiations started, it was always one step forward, two steps back, yes. Meeting is happening, who's meeting, what demands, attacks are happening. So I think it's going to be a messy process, and I think that's essentially what we've seen taking place last night. Of course, I mean, here it's a lot more complicated because it's not two parties, but it's three parties, so it's a three-way sort of talks set up. I mean, talks between two, but there's another third party, which is very much, part of the game. Now, let's just start to take it from the top. Oil prices have rallied quite hard from the lows, and so we got to $90 odd, which was the lowest point we hit after the ceasefire announcement, 90 point something. And this morning, if you look at the futures, I think what we have up on the screen is a spot price, but I think the futures are were about 98. So about a $8 rally from the lows, from the ceasefire lows, the announcement lows, I should say. Now, the Strait of Hormuz remains largely blocked. There is no change in that particular situation. The Iranian officials are saying that the ceasefire deal has been violated, largely because Israel has continued its attacks in Lebanon, right? Israel says, well, we are taking out Hezbollah, installations and command centers and all of that stuff, the entire infrastructure in Lebanon. But if you look at accounts on social media and elsewhere, it seems to be, in some sense, a little indiscriminate. So Iran is essentially pointing to it and saying, well, this was Lebanon, and a ceasefire applied to Lebanon as well. If you actually look at President Trump's first tweet, it does say that, the 10-point demand from the Iranian side, which includes Lebanon, is the starting point for these negotiations. So that's where we're at. So countries in the Gulf, which is Kuwait, Bahrain, Saudi, Israel, of course, UAE, they reported ongoing missile attacks, incoming missile attacks. President Vance said that Lebanon was not part of the ceasefire, so this is the primary point of disagreement that we have now. And, of course, the Iranian side responded, and those comments will come up on your screen with regards to what was said. And this is the comment which came through. They said, well, the three clauses for proposals have been violated so far: ceasefire in Lebanon, entry of intruding drone into Iranian airspace, and denial of Iran's right to enrichment. In such a situation, a bilateral ceasefire or negotiation is unreasonable. So, I mean, not walking away from talks, not walking away from the entire thing, but, expressing strong disagreement with how this is set up. So that's where we're at. Now, equities last night posted strong gains. S&P was up 2.5%. NASDAQ was up about 2.8%. So this is the first day reaction. We got a 3% bump. US got a almost a 3% bump as well. The S&P, by the way, sits just 2% below the pre-conflict level. NASDAQ is, not even 0.5% below where it was before the war began. And NASDAQ, by the way, is up 8.5% in the last 6 trading sessions now. So, like here, what we've seen in India, last 4 or 5 sessions have been pretty consequential. We've seen something similar in the US as well. The movement on the 10-year yield was instructive. It fell 8 basis points intraday on hopes that maybe that entire reflation trade will come back on, but it ended flat at about 4.3%, just around 4.3 odd percent or so. So, that's the price action, of course, the news as well. A little bit of this, a little bit of that. And as was always the case, and we said this yesterday as well, immediately you'll get that snapback. And then after the initial snapback, maybe there is a little bit more to go. but markets will reassess as we get into the negotiation phase and talks, etc., start to go forward. Now, this is the cash selling, right? We're in the 2,000 crore handle now, 2,000 crore something. That number used to be 9,000 crores. So that is one. It's significant, but this is one day. So we'll have to see if this holds. Nigel will talk more about this. But FI, if you look at the net short position in index futures, they were cut by some 32,000 contracts. That number is now 2.27 lakh contracts. It's still a very large number, but it's gone down in that sense. We closed at around 24,000 yesterday, which basically means we've recovered 70% of the entire fall, which started from the 27th of February. 70% is already in the bag, right? And that is why the market is, bases headlines and what may happen, is open to shocks as far as negative surprises is concerned. I'm not saying, well, we retrace the entire thing. Directionally, we've said it for more than a week now that this is de-escalation and things will keep getting better. But along the way, and this is important, especially if you're trading markets and not just sitting tight and riding through the entire thing, then it doesn't matter. But if you're trading, I mean, I think with a significant market pricing in all this optimism that, well, this is a clean road. It's never a clean road. So you'll get bumps along and you'll get pullbacks as well. So keep that in mind as we go forward. So support for the Nifty is 23,820. That's the first level. The resistance is 24,300, which is the next swing high. So this is the closest resistance and support levels that you'd work with as you begin another session. GIFT Nifty, I think, is indicating an absolutely, it was flat, but it's down about 60 odd points now as far as the implied open is concerned. Well, Nigel has walked across to the wall, the F&O side of things. Nigel, take it away.
Well, the big celebration has been the cooling off of Brent crude futures. But the spot rates are still at closer around $28 to around $30 per barrel premium to futures, which tells you that the war of weapons has paused. But the war of logistics could just be beginning. So we'll need to see the spot rate as well gradually come down, because still it's at elevated levels. Well, in terms of the cash market flows, the FIs, they sold, while the DIs bought. But let's put up a couple of positives then. The FI net flows, well, they are the lowest we've seen in the last 6 sessions. And also, if you look at the FI sell number, well, it's a third of what the recent averages were. Additionally, the net institutional daily flows, well, they turned positive finally in FY27. For the last few trading sessions, the FI and the DI number, you put it together, was actually negative, which has finally turned positive. Remember the Indian rupee, that's stabilized, that's pulled back a little bit, and that's good from a flows perspective. So hopefully the FI is selling cools off, and maybe they gradually turn into buyers as well. That's the hope. But what was clear yesterday was there was a massive short covering bounce that took place, both on the Nifty as well as on the Nifty Bank. And the data perfectly tallies in with what we saw from the FIs, both on the index as well as on stock futures. They added long positions and they covered short positions both on index as well as on stock futures. I mentioned this yesterday, that the FI short positioning could come down by at least 10%. I'll tell you what, that's precisely what happened, because the short positions came down by close to around 30,000 contracts in a single trading sessions. And, the index futures as well, they have got, the clients have got their positioning correct. Because the clients, they were net long, and yesterday they booked some profits after the long addition that we have seen in trade. So FI is still net short, clients net long. That combination is normally not so bad. On the options data, the 24,500 call, that was fairly active in trade. On the downside, the 23,900 put as well was fairly active. And there were signs of writing on both these two strikes. So if we look at it in terms of levels, just looking at the options data, looking at the technical levels, the bulls, they'll want to protect that 20 DMA. That's rather deep from here, close to 700 points away from here. While resistance will come in this vicinity, which is the 50 DMA, and the options data suggests that the 24,700 mark, that'll be a bit of a hurdle. The Nifty Bank, well, that's pat in the middle. The 200 DMA will be, the next level of resistance, while there will be support that you'll be looking at around this 20 DMA. For the time being, it's in the middle out there. The GIFT Nifty is suggesting a bit of a dip. The bulls will fancy their chances if you ever get a couple of 100 points down. But I think directionally, the street will want to be more optimistic than pessimistic, going by the cues that we've got. But the Brent crude prices, that's something that we'll track very, very closely, particularly the gap between the spot as well as the futures rate.
Thank you very much, Nigel, for that. There will always be who said what, but if you just look at the markets, they seem to be wanting to look past all this geopolitical noise. The U.S. markets yesterday closed up with a gain of about 2.5% to 3%, monster market rally, even after it was clear that the ceasefire is fragile. One party had already accused the other party of breaching it, and yet the U.S. markets rallied into the close. This morning in Asia, you can see some amount of profit booking. Benchmark indices are down about 0.5%, a 1% plus decline on the Kospi, but there is no panic. And as Nigel said, the GIFT Nifty too is down nearly about 50 points. Let's get to the equity calls then. It's Alexander Redmond of CLSA who says that the 14-day ceasefire likely offers insufficient confidence for the Gulf exporters to ramp up production to pre-war levels, but it does release cargoes trapped behind the strait, allowing much-needed relief. Both sides have adequate motivation for a deal past the fortnight. Yet CLSA expects brinkmanship in negotiation. Nevertheless, they removed the defensive stance taken shortly after the outbreak of the war, shifting back to neutral on China, a modest 10% underweight on Taiwan, 15% overweight on Korea, 20% underweight on Australia, and a lower 10% overweight on India.
Well, we've got more views coming in, right? So this is Rhythm Desai of Morgan Stanley, who says that the market appears set up for another big move. The trailing 12-month performance is almost the worst in history, and relative valuations are at previous troughs. He says India's share in profits exceed its index weight by the highest margin ever, and the sensex is nearly the cheapest ever in gold terms. FPI positioning has only weakened over the past several months. At the same time, it seems earnings upcycle is resumed, with high-frequency data showing strength, except for some scattered conflict-related weakness in March. He adds that the Reserve Bank of India has turned the sentiment of the rupee, which remains undervalued. Policy momentum looks strong too, and the domestic bid has withstood a major market drawdown.
Well, let's get back to the big story then, because less than 1 day after the ceasefire in West Asia was announced, Iran's parliamentary speaker accused the U.S. of violating the 2-week ceasefire agreement. His statement came after Israel continued attacks on Lebanon and killed at least 254 people in its largest single-day strike on the country. Iran's parliamentary speaker also added that 2 other parts of Iran's 10-point ceasefire proposal were violated. One, of course, was the attack on Lebanon. The other 2 were the entry of drone into Iranian airspace. And the third, the denial of Islamic Republic's right to enrich uranium. Meanwhile, U.S. Vice President J.D. Vance, who is leading the talks in Islamabad on Saturday, says they never made that promise on Lebanon. Listen in.
I think the Iranians thought that the ceasefire included Lebanon, and it just didn't. We never made that promise. We never indicated that was going to be the case. What we said is that the ceasefire would be focused on Iran, and the ceasefire would be focused on America's allies, both Israel and the Gulf Arab states. Now, that said, the Israelis, as I understand it, again, I'm supposed to get a fuller report when I get on the plane, have actually offered to be, frankly, to check themselves a little bit in Lebanon because they want to make sure that our negotiation is successful.
Well, the ceasefire actively disputed by both the sides in terms of the terms. So it's a bit fragile right now. But as we said, markets seem to be wanting to look past it. There is a bit of profit booking, but yesterday was a fantastic trading session across global equities. Harold van der Linde, head of Asia Equity Strategy at HSBC, is now joining in. Harold, thank you very much for joining in. First, quickly summarize how you view the impact of the conflict on markets and where we go from here, and particularly on India. The FIs have sold more than 1.5 lakh crore since the start of the conflict. How do you position India in the Asia basket post the conflict and where we are right now? And are you getting a sense the FIs are warming up to India or will warm up?
Well, let's take this on 2 sides. You have, on the one hand, what is going on with the conflict, and then how India fits into this. The conflict, it seems, and I think you were talking about it yourself as well, will probably fluctuate between, as ceasefires typically do, between there seems to be de-escalation and escalation. And we know roughly what happens. Escalation means higher oil prices, higher bond yields, weaker stock markets, and de-escalation is the opposite. And that's what we're going to go through. The issue, to a certain extent, for India is that it's a little bit caught in between. If we're going to a situation of de-escalation, is positive for equities. What we see is that the markets that have really underperformed, such as Korea, they really bounce on this. And then the story will also go back to the AI story. But if we're going to a situation of escalation and risk, That is bad for equities. Again, that is also bad for the rupee. So then people start to get worried about the rupee again. So India is a little bit stuck in a hard place, I would say, at the moment. What we now need to see in India is that the earnings are starting to come through, that there's a different story emerging. And I believe today TCS is one of the first companies that's going to start the earnings season. So hopefully we're going to get some guidance out of that.
And India in the Asian market basket for you, where do you stand on India versus the others? Has that view changed after the correction that we've seen, the underperformance now for more than 1.5 years? And the FIs, when do they come back?
Well, we are neutral on India at the moment. So we've grown a little bit more cautious. In the beginning of the year, we thought India's got a growth story to tell. Now, that is probably set aside or delayed to a certain extent. The situation is that other markets look a little bit more interesting. You either have, for example, China, that looks rather defensive and insulated from what happens here, or markets such as, I think, Korea, which are still very much over-owned and incredibly volatile. So we tried a little bit stay away from that. India fits in the middle here. What India needs is really a domestic sort of story, a new story to tell markets to gain the attraction of foreigners, I think.
Got that. Harold, good morning and good to see you. In just a quick word on, themes which will do. Are we going to go back, if this thing now, the war thing goes away, are we going to go back to how things were, before this began, around the 25th of February? I mean, it was a particular kind of setup, themes which are doing well, and not just, and this was a global thing. So are we going to go back to that kind of a setup?
No, I don't think so. I think we've seen a permanent shift. So in two ways, there's certain themes across Asia that will remain rather important or become more important, military spending, for example, but also think about sustainability and these sort of things. Energy, the rest of Asia and Europe will try to gain sort of independency of energy supply. So that means renewables will come back to focus as well. Another thing, of course, is that although maybe the political situation, even if it would somewhat normalize, it doesn't mean that oil will flow directly. We already have shortages in packaging. I understand that, for example, cement companies in India, they don't really have an energy problem. They have a packaging problem. They need to import that from other countries at, of course, higher cost. So there is already a reset in inflation, in pricing levels, and therefore real incomes are a little bit lower. Spending power will be a little bit lower. So that will stay with us even if the situation in the Middle East somewhat normalizes.
All right. Hi, Harold. Good to see you, Ben. Yeah, as you mentioned, the problem for cement companies is doublefold, right? One is that the fuel costs have gone up, which to some extent could be managed, but the packaging cost moves up. So effectively 200, 250 rupees per ton is the cost increase. Let's see whether they can push that through. That said, just in terms of preference, you said still China over India?
At the moment, it's China over India, but that is really a sort of defensive call. China's insulated. It doesn't have the currency overhang. It is energy, somewhat more energy dependent to a certain extent, you could say. There are domestic signs of growth coming through, and that probably won't be impacted too much with what happens on the Middle East. So it looks a little bit more defensive at the moment than India. I think the story is really going to be India versus Korea. And Korea has got a fantastic growth story. That's AI and chips and components and these sort of things, and also nuclear and power and military spending. They benefit from a lot of these things, but it is a really, really over-owned market, and we need to see that normalize. And I think as people take money out of Korea, they need to put it somewhere else. And I think China is one destination, maybe gradually India as well, but we need to have a stable currency in India, and a sort of a growth story needs to come through. Now, we got reporting season coming up, so hopefully we get some signs of that coming through soon.
Right. Harold, I want to ask you, where are you on the AI trade? As you mentioned, the Korean markets, they ran one way. A couple of other markets as well in Asia did very well because of the AI trade. Do you think that's run ahead of itself? And, maybe there's some money that comes off from some of those AI-heavy stocks?
Yeah, I think the AI trade is potentially a very good growth story, but I think it's very well known and everybody's positioned for it, which is why most funds are maximum almost overweight on Korea. We haven't seen positions this big in Korea for basically since I started in 1996 or so. So that's 30 years. So the positions that people have over there seem to me pretty crowded. This is adjusted over the last couple of weeks. That's coming down. We're actually looking at data to see if we get an inkling of where that really stands. But I think that people are still overweight and need to sell a little bit further. And then, of course, India is the opposite. People are very light on India at the moment. We just need to spark something to interest them again.
Yeah. And it needs that spark trigger, whatever you want to call it. Harold, thanks very much for joining us. Good speaking with you and pleasure. Let me just quickly run you through the interactions which are lined up here on the program. So 8:35, we've got J&K Bank Management coming on to talk about the fourth quarter business outlook and the outlook ahead. 9 o'clock, we have Praveen Sahai of PL Capital to talk to us about the likely impact of unseasonal rains on AC sales. 9:20, Devina Mehra, First Global will be a market master of the day. 9:35, we get you a discussion on the defense sector with the management of MTAR Technology. Stock's done phenomenally well. There's also Idea Forge. Ankit Mehta will be with us. Defense is a theme, as Harold also just pointed out. Following that, we'll be speaking with MB Mahesh of Kodak Equities. This is QSQT. We take stock of what to expect from banks in the fourth quarter. Lata at 10:15 comes on with the former SBI Chairman Dinesh Khara and AZB's Suharsh Sinha on the dramatic amendments to the bankruptcy law. Stay tuned.
Time to slip into a quick break. On the other side, we go full tilt into our top 10 stocks that we're tracking for you. For the time being, I give you a sneak peek. Bosch, InfoEdge, KC International, Delivery, ITC Hotels, NHPC, RITES, as well as Questcorp. All of them will be reacting to positive news flow, while you have Poonawalla FinCorp as well as Signature Global that will be reacting to negative news flow. Take that break, come back, we get into further detail.
Welcome back. You're watching Bazaar Morning Call. It's time now to talk about stocks that you need to have on your radar this Thursday morning. This is CNBC TV18's list of top stocks for the day. First up, let's talk about Bosch because there's been a big acquisition here. Vivek?
Well, that's right. It's a confirmation of a CNBC TV18 news break that we had done as early as July 2025, and post which the company in subsequent earnings calls had said that, yes, they were in the process of restructuring their mobility business. So yesterday, the update that the company has given the exchanges is that the company is looking to acquire a sister entity called as Bosch Chassis Systems, which is in the business of anti-skid braking systems. Now, this particular deal, Bosch India will acquire Bosch Chassis at a little over 9,070 crore rupees, which values Bosch Chassis Systems at 10.6 times FY25 EV to EBITDA. Now, this particular deal is going to be funded via a mix of cash as well as equity issuance, and the company, number one, will issue close to 2,460 shares at 35,200 rupees a share. The remainder of the balance of 9,060 crore will be funded via the company's internal cash accruals. So the deal is expected to close by the first quarter of FY27. Remember, as far as Bosch Chassis is concerned, it's a supplier focused on braking as well as safety systems, including ABS, which is expected to be the next high-growth vector within the auto component space. As far as deal synergies are concerned, the company says that this particular acquisition combines Bosch's powertrain capabilities with the high-growth safety and braking systems, and the company expects this deal to be accretive all across revenue, top line, as well as EPS. In terms of valuations, quite attractively valued when you're looking at the peers. ZF CV trades at a little over 41.5 times EV to EBITDA. Endurance Technologies, the company's competitor, trades at over 21 times EV to EBITDA. So at around 10.5 times, it is an accretive acquisition as far as Bosch India is concerned. But one thing investors need to keep in mind is that the stock has rallied almost 20% in the last 5 trading sessions.
Got it. All right. Thanks a lot for that, Vivek. Let's hop across to Vinny. She's here to tell us about InfoEdge as well as KC. Morning, Vinny.
Hi, good morning. So first up, InfoEdge, they've come out with a Q4 update. Decent update is what I would call it. Standalone billings for the company has risen by around 7.5%. Recruitment business, obviously, which is the main business for the company, that's seen a growth of 9.5%, coming in at 810 crores. Now, obviously, the growth normally that you see for recruitment business is the range of 9 to 11%. So this time it's in the bit of a lower range. Some of the analysts are concerned about that, but I still think that given that, the Gulf tensions that are going on, geopolitical tensions that they've highlighted as well, and saying that Naukri's Gulf business was impacted overall because of the tensions, and India recruitment business was a bit muted because of that. 9.5% growth is not a bad growth. 99 acres, muted growth of 1.9% there. Jeevan Sathi saw 21% growth, and Siksha, that saw a fall of around 12%. So all in all, we'll still expect some bit of a green coming in for Info Edge. KC International, the company has secured an order of around 2,500 crores. This is mainly a civil transportation and distribution order. And overall, the order book for the company has seen a good growth over the last few years. Execution was a concern. Now it's coming at order book for December stood at around 36,000 crores. Furthermore, order books are coming in, but execution will be key from here. But still green today on the screen for this one.
Thank you very much for that. KC International was up 7% yesterday, though from the start of the year, stock is still down 23%. Vivek is back with us for Poonawalla FinCorp.
Well, that's right. So what we are understanding from our sources is that Poonawalla FinCorp is likely to launch a QIP to raise funds to the tune of close to 5,000 crore rupees. We understand that this particular QIP is likely to have two components, both a base size as well as an upsize option. We understand that both of these components could be split in the range of 2,500 crore rupees each. We understand that the equity dilution for this particular fundraise could be as high as 15%, and the issue is likely to be at a small discount to the current market price. The main purpose of this particular fundraise, given the fact that it's an NBFC, it is growth capital for the company. We understand that both Kotak as well as Jefferies are appointed as bankers to the deal, and likely this particular deal or this particular fundraise is going to be launched later this week or early next week. We reached out to the management of Poonawalla FinCorp. A response from them is awaited, but we'd like to highlight that on January 16th, along with the Q3 results, the company had taken an enabling provision or enabling nod from the board to raise up to 5,500 crores via the QIP route. So we'll wait and watch out for as and when this particular fundraise has fructified.
Got it. All right. Thanks a lot for that, Vivek. Hopping across to Mangalam, he's got a couple of stocks on his radar, namely Delivery and IDC Hotels. Morning, Mangalam.
Morning. So there was a lot of fund action that took place in yesterday's trading session where Nexus Ventures sold about 1.5% of their stake in Delivery. Remember, the company owned about 4.5% stake as of December 2025. The buyers were fairly strong. So we did have, good demand coming in from the likes of ICICI Pru MF, Nippon MF, Edelweiss Mutual Fund, SBI Mutual Fund as well. And the stock has already seen a rally of nearly 88% in the last 12 months or so, but still below its issue price of 487. So because the stock has seen some momentum, there is mild supply coming in and strong buyers. I'm going with green on Delivery. On the other hand, ITC Hotels, GQG partner, has sold about a little over 0.5% stake in the company at 152 rupees. Remember, the stock's 52-week high is 261, so it's corrected about 40% plus from that 52-week high level itself. We don't know the buyers. They haven't been disclosed yet. But remember, GQG holds about 2% stake in ITC Hotels. So whether they will sell more or not is the big question. But by and large, the market's mood is a lot better. And at the same time, hospitality stocks after correction, the street is believing that maybe, there is some sort of momentum going ahead as travel and, tourism recovers post this war-led uncertainty. So let's see how that goes. I'm giving green for both ITC Hotels and Delivery.
Thank you very much for that. MC Development's Q4 business update also on your screen. Collections up 39%, and pre-sales up 89%. Ria is joining in with more stocks in the news.
Well, yes, let's start off with NHPC first. The CCE has cleared a 26,069 crore investment for the construction of a 1,720 megawatt hydro project. This is to be done through a JV with the Andhra Pradesh government and will be completed within the next 96 months. Now, apart from this, the government will also be extending a total of rupees 6,064 crores as budgetary support for the project, along with a central financial assistance of 750 crores. So this will be a positive development for the stock and expected to open in the green today on the back of that. On the flip side, we have Signature Global today coming out with its Q4 update. Quite a weak set of numbers here. The Q4 pre-sales have gone down by 5% on a year-on-year basis and 24% sequentially as well. Even the collections have dipped by around 22% compared to the previous year. And even if you look at the full year number for FY26, the pre-sales and collections have dipped by around 20% and 9% respectively compared on a year-on-year basis. Now, remember, the company had already indicated to us that the growth for this year will be range-bound and they will not be able to meet their pre-sales guidance for the year. But nonetheless, weak set of numbers and stock expected to open in the red on the back of that. Apart from this, two other stocks will also be in focus. The first one is RITES. They have the LOA that they had received from NALCO back in 2021. The order value for that has been increased to 19 crores from the earlier 80 crore order value. And this is for an EPMC work for the construction of the Utkal D coal mine, which is an ongoing project. And the last stock is Quest Corp. They have received an IT refund of cumulatively 64 crores.
Okay, well, thanks very much, Ria, for that. Let's just quickly recap things, right? So, stocks with positive news flow: Bosch, InfoEdge, KC International Delivery, ITC Hotels, NHPC Rights, and Quest Corpal. Stocks with negative news flow are Poonawalla FinCorp and Signature Global. Commodities in focus. Manisha is here with just that. Manisha, good morning.
Morning. Thank you so much for that, Prashant. Well, I'll start with the crude oil prices, where we did see prices decline, giving us our biggest fall overnight since April 2020. But we have seen some buying come back, and 2.5% of gains is what the Asian markets are looking at. So $97 a barrel is back in case of Brent prices. There are renewed Israeli strikes on Lebanon. Strait of Hormuz remains largely obstructed. U.S. insists Iran abandon its nuclear ambitions. So the fragile Middle East ceasefire that we're looking at right now seems to be bringing that geopolitical premium back in case of prices. While the crude and the crude derivatives are on a rise, what we have seen profit-taking come back yet again is in case of the gold prices. Yesterday was almost $4,800 an ounce. We seem to be holding around $4,700 an ounce right now. The dollar index, the bond yields also have edged higher, and that seems to be weighing on many of these commodities. Overnight, we saw silver prices gain up by 5%, copper gain 3.5% to a 3-week highs. But in the Asian markets, it's a very muted, subdued trade right now, perhaps awaiting further news.
Thank you very much, Manisha, for that. Here's a quick reminder for all our viewers. Catch our special and exclusive conversation on all things commodities as we decode the shifts in gold, oil, metals, and how it translates into actionable market strategies and insights. Tune in to CNBC TV 18 today, 4:30 p.m. onwards, for a unique opportunity to engage with industry leaders and gain insights.
Welcome back. You're tuned into Bazaar Morning Call. Well, it's that part of the show when Hormuz joins in to tell us all about those big movers yesterday, and some of them were backed by delivery. Hormuz, morning.
Good morning, Nigel. And real estate stocks, we spoke about them on closing as well yesterday. They were the big movers from the lows that they had seen initially. And all of them, Lodha, be it DLF, Prestige Estates, Godrej Properties, all of them seeing gains of anywhere between 6 to 8% in yesterday's trading session. And even if you take a look at the trading volumes as well, barring DLF, although the volumes were higher than their 20-day average, they were not as significant as you would see when stocks move that quantum with the way they did. Even on the delivery front for Godrej Properties, the delivery volumes were the same as their 20-day average. Other than that, the volumes for Lodha, for Prestige Estates and for DLF were significantly higher as well in comparison to their 20-day average. The other major mover yesterday were the oil marketing companies, HP, BP, IOC, all of them did well yesterday. And for HP, and all of them had trading volumes at least twice their 20-day average. And even on the delivery front, if you would see, HPCL had close to 90 lakh shares marked for delivery. BPCL and IOC had anywhere between 1.1 crore to as many as 2 crore shares marked for delivery, and they too were higher than their 20-day average. On HDFC Bank, of course, yesterday was a big mover in trade. The 5th straight day of gains for the stock, the biggest single day gain since January of 2024. 7 crore shares were traded yesterday, the 20-day average of just 6 crore shares, and 60% of those shares were marked for delivery. The stock made a 52-week low on the 30th of March. It's up almost 12.5% from those levels, and in fact, it was the most traded stock on the Nifty 500 yesterday.
Thank you very much for that. Dipan Mehta, Director, Elixir Equities, is now joining in. Dipan, finally that ceasefire came through. The question is to what extent it holds, in what form and shape. But we did get that 900-point rally on the Nifty. Now, you were waiting for things to settle down before you dipped your toes back into the markets. What did you do yesterday? Are you now a little more comfortable with deployment?
No, I don't think so. I think, again, yesterday also was like day before yesterday, just wait and watch. And we know how tenuous these ceasefires are. Already there are news that ceasefires are being violated and that Lebanon was not covered by the ceasefire. So there's still a lot of confusion. And as we speak, I'm not certain that the Hormuz Strait has opened completely. That's what the reports that I have read. So I think it's going to remain volatile for some more time. And I think next 2 weeks market may just kind of drift around these levels also. And again, we'll have another deadline. And then depending upon the outcome post deadline, you may have another violent move. So I think it's best to, again, continue with this approach of just wait and watch. and we'll have an earnings season starting soon, so things will get busy with that. And I think more than the numbers, this earnings season, it'll be what the management commentary is in this particular geopolitical scenario.
So while you're not investing right now actively, you are constantly analyzing and trying to identify trends and opportunities, the disruptions. Take us through some of your learnings now in the last 1 month.
I think energy security is an investment theme, which has been in the background. It's not got the focus of the government, but we know that once the government decides to give focus to a particular area, a lot of winners come through. I think look at what happened in defense, what happened in railways as well, and what happened with a lot of PSU banks. So I think that something similar can play out over here. And in this, immediately, I think the government, or even in the coming budget next year, or in between the year, I think a lot of encouragement policies, programs will be drafted for energy security. And within that, I think, there are not any direct plays, but a lot of indirect beneficiaries may come through. And even PSU companies like, say, ONGC or a Coal India, which have been languishing for so long, they may get rejuvenated with fresh government support or some fresh projects coming through in them, flexibility of pricing. Something can happen over there because end of the day, coal is central to our energy security, and then there's options to use coal better, like coal gasification. And with ONGC, they can always try and encourage it to do more exploration of crude oil. So there are a lot of minor and major stocks which will benefit from this energy security investment theme, and that's something which we are looking at very closely.
Yeah. Deepan, I think you were talking about energy security. I think last time you were on, right? And I said nuclear is perhaps another one. And that fast breeder reactor was all the rage, at least on the Prime Minister saying, well, they've commissioned it. But, that's a slightly longer game, the nuclear bit. We already have running reactors and more getting commissioned. But thorium-based reactors, that'll change the game in that sense because we have enough thorium. And we have, I think, about 25% of the world's reserves. But it's a few, at least, I think 10, 15 years down the line, if you get that right. But energy security is a big one, and you're absolutely right. I think we'll hear more from the government to try and fix that issue, or at least, bolster issue. I think last night there was a tweet from the Prime Minister again on energy. It started with energy security, and I think it was about the Rajasthan refinery of HPCL, how they're allocating more to expand the refinery. What they said, the refinery size will be earlier. So it's very much on the minds, I guess, of right from the top in that sense. Even what else is looking with the market looking slightly more constructive? You don't have to be adventurous, but that tailwind sometimes gives you courage as well. So where else are you focused on?
I think that let's just take this energy security discussion a little forward. And there are a lot of segments within this investment theme. So there are, of course, the ONGC and Oil India, which can focus on exploration. There are the oil services companies like Asian Energy is there, Deep is there. Then there is also Antipolis Ceylon, which provides services to the oil industry, oil and gas industry, either in terms of exploration or taking up fields where they can be made more productive. So that's one theme. Then in terms of diversifying our sources of energy, especially gas, the Aegis group of companies, that is Aegis and Aegis Wolfpack, and even I think so those companies also come into focus. And I think one of the big impetus may be given to renewable energy, solar and wind power. And I read somewhere that battery storage systems could be a really big focus area and could make solar and wind power even more reliable. So companies engaged in that space, I think their prospects certainly improve. And right from Vari, Premier, Vikram Energy, MV, Voltaic, all these companies should do very well. A small company which comes to mind is Fujiyama, which is engaged in rooftop solar installations. It's a retail business, appliance type of business. That also looks interesting. So that's where I think my focus is on renewables, companies engaged in providing services to the oil and gas industry. There's Gas Authority also, that also can be rejuvenated. It does trading in gas as well, and got a petrochemical complex, trading at very, very reasonable valuations. So these are the kind of ideas that I'm actively studying. And of course, once the war is over and done with, the existing investment teams will, start to do well. But one thing also which comes to mind, I'm sorry, I'm extending, is the export-oriented businesses, and they're trying to figure out with rupee at 95, which is a reality and a long-term reality, which are the businesses which become super competitive in the global context. And right now, of course, they are stressed because of geopolitical events. But that the rupee rate really benefits certain set of companies. And if we do have a free trade agreement with USA, then there could be a lot of beneficiaries over there as well.
Lots of names there, lots of ideas to chew on, think about, Deepan, and I appreciate that. We will take a quick break, Deepan. We are going to be speaking with the management of J&K Bank after this break, so stay with us. Interesting conversation coming up next.
Welcome back. As promised, let's get chatting with the management of J&K Bank. They're in focus. They reported a steady business update. Advances saw an uptick of close to around 17%, while deposits lagged a little bit. Third grew close to around 11%. To help us out with what's the way ahead, how was the past quarter, we're joined by Mr. Amitava Chatterjee, the MD and CEO of J&K Bank. Hi, Mr. Chatterjee. Good morning. Always good, sir, to have you on the show. Before I come to you, just listing out the three focal points we're looking at: capital headroom post the RBI changes, the impact from geopolitical tensions, and the QIP timeline as well. Let's start off with the business update first, sir. Advances grew a great deal, but deposit growth is a little bit slower. How do you look at both these two in the time to come? And your CASA has come down. A few years ago it was around 50%. It's come down ballpark around 45% or thereabouts. Where does this number stabilize at?
Very good morning, and thank you for having me here. First of all, I would respond to the CASA question first. If you look at quarter on quarter, we have improved a lot. I had, in my last conversation with you, I had said that we have undertaken certain strategies to improve CASA within Jammu and Kashmir, which has worked. And if you look at the position of CASA, which had gone down to almost 44%, we are close to 46% now, just slightly below March. And if you look at the absolute levels, it has increased 8% YOY.
Yes.
So we have started regaining CASA, and I'm very sure very, very soon we'll be able to reach the targeted numbers of 48%. It's on the cards now. And second, as far as deposits are concerned, we all know we had a challenge. I mean, all the banks, not only J&K Bank, all the banks had a challenge in deposits. But again, if you look at the last quarter, we had a tremendous growth in deposits, which was, of course, a result of the steady efforts that we were making. First 3 quarters were not so good. So from 10% around in the third quarter, we have come to close to 11.5% in the fourth quarter. So I would say that even under very trying circumstances, the deposit growth has been good. As far as advances is concerned, I should say I'm very satisfied. We had to change our strategies midway through the year because of all that had happened in Jammu and Kashmir. So we changed our strategy, and also the plan that we had of mixing the business from Jammu and Kashmir as well as rest of India, that has worked. I should say that we wanted a 50% contribution. The contribution for this year from rest of India has been more than 50%. So overall, I would say very satisfying year for the bank.
All right, sir, good morning. Prashant here, and good to see you. You said trying circumstances. Could you explain that? I mean, is this generally the chase for deposits, and that's what you meant, which all banks are facing, or is there something more particular?
When I said trying circumstances, it was not related to the deposits. It is related to what had happened in Jammu and Kashmir throughout the year last year.
I see.
Right from 22nd April, what happened in Pahalgam, and then the floods, and then the entire communication was cut down for more than 2.5 months. So this state went through a lot last year. And
sir, got that. So I get that. That's the context. That's the backdrop. Just one question. We've heard from banks and financial institutions that the first 10 weeks of this year, that's calendar 2026, were pretty good. Credit growth picked up meaningfully. But since the wars in the Middle East started, things have slowed down naturally. I mean, it's had an effect on sentiments, mainly through the sentiment channel so far. Maybe MSMEs, etc. Operationally, it's been difficult as well. Can you tell us what's been the experience for J&K? I'm specifically talking about, the situation starting middle of March, onwards, till now.
You are very right. You are very right. Beginning of the calendar year, the growth in advances has been very good. The offtake and the appetite was very good in the industry. And of course, once the war started, for the banks as a whole, it was pretty tough. And the sentiment, obviously, I mean, not only the sentiment, the situation was bad. The fear of inflation, high inflations, and then the costs going up, and supply chains being blocked. All these things put together, the industry was absolutely not sure as to what to do and how to go about. But for J&K in particular, I would say the impact has been much less than any other place in India. And that too, for J&K Bank being a small bank, it is quite insulated with all these geopolitical situations which happen. J&K gets impacted when something happens in J&K. Otherwise, this bank is more or less insulated. Even in the later part of March, I found business coming comfortably to us. So I would say it's a lucky thing to be, lucky position to be in. But more or less, this part of the geography and the bank was more or less insulated with what has happened so far.
But you do get nearly half of your, growth comes from outside of India's now. You've been diversifying to rest of India. So in that context now, can you quickly tell us what the credit growth guidance for FY27 is going to be? Because GDP cuts for India have been brought down and banks generally mirror what happens with the GDP growth.
It should be, see, I would believe that we would still be able to grow at around 14 to 15% in advances for the coming year. Okay. So, see, obviously, the size of the bank, the baseline, if you consider business growth for this kind of a bank is not that kind of a challenge.
Got that. So 14 to 15% is your advances growth guidance for next year. Sir, any stress that you're seeing with the MSMEs that you lend to? Have any of the borrowers reached out to you saying that on account of the conflict, the supply side challenges, etc., there is some asset quality stress? And are you going to turn a little more cautious about lending to MSMEs?
Not in the MSME segment in this geography, not at all. I would continue to be supportive. In fact, last year they had a difficult time, so they have come out of it. There was a lot of resilience, and this is the time for the bank to support the MSMEs in this part of the country. So we will continue to lend. And answering to your first question, I have not yet received any request from anyone requesting for any kind of a support or restructuring on account of what is going on in this world at the moment.
All right, very quickly, sir, what about the QIP? What's the update? We were targeting end of the fiscal. Unfortunately, that war broke out. What's the update? The funding requirement, the QIP, when will you be launching it?
Fortunately, see, our capital position is quite good. We will be somewhere ending this year around 16.5 or around 17 of CRAR. So the compulsion wasn't there. We will definitely, I mean, sometime in this quarter or next quarter, we will try to take it up. Of course, again, as I said last time, the situation remaining conducive.
Just one last, quickly, competitive, as you go outside of J&K, are others coming in to J&K, especially PSUs? Has competitive intensity gone up or is the same?
Yeah, it has gone up. It has gone up for the last few years.
Okay.
There are 38 banks in Jammu and Kashmir now.
Wow.
So the competition is there.
Competition is there. And PSU banks have been stepping up in a big way, and that's the feedback we get across the board. So
Yes.
So that's the other factor, right?
It's there.
Well, when we used to, many years ago, 15, 20 years back, when you used to think about banking in J&K, used to be J&K Bank, right? But now, of course, as you said, 38 banks.
We still command a 60% market share.
Yes,
for your information.
All right, absolutely. Thank you very much, sir. Appreciate you joining us, and good speaking with you. Good luck. Deepan is with us. Deepan, quick thoughts, J&K?
I think it's a nice regional bank, and with J&K, revving up, I think, in terms of economy, in terms of now there being peace over there, certainly it's a great opportunity. Seems to be like the right bank in the right location at this point of time. But my view on the banking industry has been a bit circumspect, and it's the same reason which you asked this question: competitive intensity. In my opinion, it is or getting to be a red ocean in the banking industry. And these kind of net interest margins are not sustainable. Everybody talks about that 14-15% growth in advances, but raising deposits is a challenge. And net interest margin, which is around about 3% or thereabout, keeping that also intact is going to be very challenging. And if you see the CASA ratio for the entire banking industry, I read somewhere it is at a multi-quarter low.
Yeah.
So these are things kind of which raise red flags. Maybe not immediately. Next 2-3 quarters will be good, but who knows? 3 years, 5 years, where this industry will be.
Got that. Deepan, thank you very much for that. Really appreciate your time, thoughts, insights, as always, here on CNBC TV18. We'll take a quick commercial break here. We are back in just a bit. There's about 5 minutes for the pre-open session to kick off. The pre-open, we'll do the pre-open, but Praveen Sai of PL Capital will discuss the likely impact of the unseasonal rains on AC sales. Mitesh and Sudarshan with technical trading ideas coming up. Mitesh is with us, and so Sudarshan with what they'd wanted to do as far as today's trading action is concerned. Yesterday you got this big, clean, one-way move. It gapped higher and then stayed gapped up through the course of the day. Gentlemen, morning. Great to have both of you here. Sudarshan, you go today. You go first. What's the setup, and how are you thinking about taking positions?
Yeah, good morning. Well, the setup is that we are now looking at a base that is probably in place for the Nifty. That's somewhere in much lower, around 22,000 to 22,500. So once we have that conviction that probably the worst is behind us, the trend of the market is likely to be upwards. That means every dip becomes a buying opportunity. Today, the markets are likely to be choppy, and which is very normal. We had an enormous up move yesterday, or a large range day. So subsequent to that, markets become choppy. They go up and down. If you see sharp corrections intraday, then go and buy them. If they correct, that would mean about 200 points from the open, approximately. That's a buying opportunity. Otherwise, stay away.
Okay, that's fair enough. Only buy large dips, meaningful dips in that sense. Mitesh, what about you? How would you approach it?
I think a very similar kind of idea, given the fact that this massive gap up which happened yesterday has turned the tables on the upside. Now, I am looking at 24,300, 350 as the first target area, possibly 24,800 as the next target. But with the 4 days, the market has moved up from levels of 22,180 to about 24,000 plus. So I think a fresh buying should happen on some kind of a decline. And my preferred zone is around 23,860, which is roughly about, 23,860, 850, which is roughly about 140, 150 points lower. So in case we get around those levels, I would want to take some options.
Okay, got that. What about individual trades and stocks, Mitesh?
Prashant, good morning. I have a buy on BEL with a stop at 427 for targets of 445. A buy on Cummins with a stop at 47.30 and recommend to buy around 47.80 here. So keep a stop at 47.30, look for targets of 48.80. Indian Hotels is something which also is giving some signs of reversal. So buy with the stop at 625 for targets of 660. And Bharat Forge is the final buy call. Keep a stop below 1764. Look for targets of 1820.
Okay, all right. And Sudarshan, what about you? What are your picks?
Well, it's an all buy list. State Bank is a buy with a stop under 1044. Adani Energy Solutions is a buy with a stop under 1055. Indigo is a buying opportunity, stop under 4522. And Godrej Properties is a buy with a stop under 1670. Just one more line. We'll feel that the markets are becoming normal once the VIX goes below 15.
Got that. Sorry, what did you say, Sudarshan? Once the VIX is below 15?
That the VIX needs to go down below 15, 1.5, for us to give a sense that the markets have become normal.
It's finally moving on in a more normalized kind of way and not whiplashing. All right, got that. Absolutely. Thanks very much, Sudarshan. Thank you very much, Mitesh, for that, and appreciate it. Well, let's put the spotlight on the consumer durable space. Cooling products, ACs, unseasonal rains may dampen peak summer demand. We, by the way, spoke with the Blue Star management who echoed that exactly. Cables and wire industry is also in focus. Let's get all of that in with Praveen Sahai, research analyst at PL Capital. Praveen, good morning. Good to have you with us here. Prashant this side. So ACs first, Praveen. You know, we had a long, extensive chat with the Blue Star management exactly on this, and they kind of echoed this. They said, well, April is crucial. It's not as if this can be now. We can say April is okay and we'll pick up in May. That's not going to be possible. So what's the sense? Have you brought down numbers, estimates, and where are valuations now vis-a-vis these lowered estimates?
Yeah, thank you, Prashant, for having me. So as you had highlighted that the RSC, because of the last 15 days of March, the summer, especially in the north, has been quite, the low. So that's the impacted the RSC sales. But quarter gone by, if I look at, and the summer start from the south, so some states like Tamil Nadu and Andhra Pradesh done very well, and the players who are more prominent in the south has done pretty well. Even in the first week of the March has been good in the north. So in that sense, there is a not overall sector, but to the certain players, the numbers were good in terms of the fourth quarter. But as the summer moved to the north, and April, May is crucial for the north summer, and especially for the RSC sales, where we are seeing quite, the summer is not so harsh, and still temperature is down, and that's impacting the RSC sales. So just to give you certain, for the last quarters, LG has done quite well, being in the one of the largest player in the south. 1 million unit they had sold for the fourth quarter, and their growth there is also good. However, price hikes which all companies are taking in the March reflected in the Q4, and that's lead to certain double digit of growth for the Lloyd or Voltas or even the LG for a quarter. But the way forward, there is a difficult, whatever we are building in terms of the growth for the entire year for FY27 is at somewhere at the risk. And on the valuation side, if
Praveen, just want to clear the point first. What are you building in, and is the risk to the upside or the downside, going by the initial trends that we're seeing?
Yes, so on the volume side, there is a 12 to 15% of a volume growth, along with the price hikes, which they had taken a 10% in the January, and further in the April around 6 to 7%. So altogether are factoring in the numbers. But if the summer is not going to be a good and similar to of last year, definitely the volume numbers is at a risk.
Okay.
And which means downside for stocks from here, because names like Voltas, Blue Star have corrected, to be sure, Praveen, right? Last 1 month.
Yeah. So the all RSC players has a corrected. Voltas, Blue Star, even the LG has a corrected. So the valuations, if I look at Voltas currently, or you can say the LG, even the Havels, like more prominently Havels and the LGs are trading at a 35, 37 times FY28 earning. So the valuation looks pretty good, but the risk of a summer, which is actually hampering the the summer season for them.
Yeah. No. So from a near-term perspective, stocks have more downside, Praveen?
So it all depends on the summer, but I prefer here who is diversified, like of a LG, who is quite diversified towards the other segments as well. And already they have taken a price hikes there as well in the ref and the washer. So I think one should go with the diversified players like of LG or even the Havels, but preference is on the LG because there are beyond RAC, they have a levers of ref and the washer. Last year has been quite a soft this year because of their essentials release. They are also expected to some volume from the ref and the washer. Excuse me, and the price hikes actually. So apart from that, there are other levers for them is a AMC business or B2B business, which is going to drive them. And they are trading at around 35 times. So my preference is on the LG on the consumer durable space. So, one should look at a beyond seasonal product now the company who has penetrated to.
Yeah. Got that. Let's come to, so LG is your pick out of the lot in that sense because it's more diversified across product categories, not just ACs. Now, cables and wires, right? What's the top idea and what are the dynamics there at play?
So wire and cable did quite well for the last 2 years. And for this quarter, if I look at fourth quarter gone by, there is quite a soft volume numbers. So nearly around low single digit of a volume growth for KEI, Polycab, even to the RR cable. And this is because our copper prices, which is continuously going up, that from the February and the March, we had seen there is a softness or the correction nearly around 0.5 or 0.9% of a correction. And that has given some kind of for the distributor to destocking scenario in the wire, and also the cable sales has impacted. So the volume got impacted. Whereas if I look at on the long-term side, especially for KEI or Polycab, the LT cable to ST cable to extra high voltage cables where they are investing in, and the opportunity which is arising from the data center or the HVDC opportunities, they are going to deliver a good volume growth for 27-28. And they are also trading at around 31-32 times on FY28 earning. So they both are looking good. I prefer KEI because they are a pure play on the cable business, and 2,000 odd crore of a capex is going to get live by this financial year. And the opportunity arises from that capex is around 6,000 odd crore addition in their revenue. So I think they are a better placed right now to play with.
Okay. Got that. Praveen, we'll leave it there. Thank you very much for joining us. Good speaking with you. It's a useful conversation at a time like this, and getting perspective on both areas, which is consumer durables and the cable and wire segments. I just want to quickly, if we have time, a minute or so, play out some sound bites from some of the top market voices that we spoke with yesterday. So we spoke with Samir Arora, we spoke with Sunil Singhania, we had Nilesh Shah yesterday who came on as well. And, all of them basically making the point that unlikely that we go back to like a full-scale conflict situation, but we'll have to monitor things carefully, not in one-way bullish, all three of them, but definitely more constructive. Just listen.
We are hoping, in theory, you are hoping that this is the Venezuelan model, where as of now, previously it was a different model that you're changing the regime. Now you're basically saying keep the regime, but the top guy is a little bit more mellow, or he has done his bit and now he thinks there is no this thing. So the top few guys are changing, and who may be a little bit norm. I mean, they won't be as anti-US or whatever, and then life moves on. That is, I guess, the new outcome.
I think so. So the beta sectors like banking, obviously infra, real estate, capital goods, a little bit of, companies, impacted because of huge crude prices, they will all see a bump up. I think what we have to see now is whether the stance of global investors changes, particularly for India.
Well, let's get our technical experts back on for the 9:10 call. Sudarshan, you go first. What's the call you have for us?
Buy Adani Energy Solutions with a stop under 1,055.
Okay. Adani Energy Solutions, that's the one that Sudarshan is looking at. Mitesh, what about you?
Yeah. I recommend buy on Bharat Forge.
Okay, Bharat Forge. Let's talk about auto stocks. They bounced back very sharply yesterday. Sudarshan now joins in to tell us what the brokerage view on them is.
So yesterday we had seen a big move in majority of the auto names, and that led to Nifty auto surging as high as 7%. But since the time war had begun on February 27 till March 30th, the index was down almost 17 to 18%. And of those 18%, almost half of those losses have been regained since March 30th till yesterday. And yesterday's surge was mixed of short covering and fresh buying that those stocks have seen. So Ashok Leyland, Force Motors, Tata Motors, PV, Maruti and Bajaj Auto had seen major short covering, while there was a fresh buying in the name of Eicher Motors. Now going forward, what will be the important triggers for these auto stocks? So first, how do metals, gas and crude prices move? Because input cost is going to be one of the major concerns for majority of the companies. And also if there are any challenges related to supply chain, because production will depend on that, because till now the production has been normal, but if there is an impact on supply chain, then these companies will have to take the production cut. And if the demand momentum sustains that we have seen in H2 of FY26, despite majority of the companies taking price hike, and also if there are major new launches. What do brokers say? BofA Securities has upgraded Bajaj Auto to buy, and target here is increased to 10,700 rupees per share. It says valuation is reasonable and it's a defensive bet amid current macro conditions, and better pricing discipline, export and forex tailwinds will offset any growth shock that Bajaj Auto sees. And net margin EPS cut estimates are also very least for Bajaj Auto, and higher crude can actually be a tailwind for exports to Africa and EV business, and also positive on Hero Moto and Eicher Motors. JP Morgan says risk of disruption seem to be abating, but commodity inflation is likely to hurt the sector in Q1 FY27 and beyond. It has cut FY27 EPS estimates in the range of 2 to 16%, and some stocks are back to levels that were seen pre-GST rate cut. Amongst preference, it prefers Maruti, M&M, Hero and TVS, upgraded these stocks to overweight, downgraded Apollo Tyres and upgraded Escorts to neutral from underperform.
Well, that's it. Thanks very much for that. Bosch is what we want to focus on, and I think Vivek had highlighted this, and the news is out now. Vivek, take it away. Morning.
That's right. Good morning. It's a confirmation of a CNBC-TV18 news break. A sister entity called Bosch Chassis is what Bosch India is going to acquire a 100% stake in. Two brokerages have reacted to this particular development. UBS says that this particular acquisition is likely to be value accretive from both an EPS as well as a return ratio standpoint. They say that the implied FY25 EV to EBITDA multiple of 10.6 times is meaningfully lower than Endurance Technologies' FY25 EV to EBITDA of 21 times. Motilal Oswal Financial Services too has written on this particular development. They're saying that the acquisition is rewarding for minority shareholders. It has a healthy financial track record of a 17% revenue CAGR over FY23 to FY25 with a 650 basis point margin expansion. They say that the acquisition will lead to an EPS accretion of 5% on a FY25 basis. It's important to know the stock has run up almost 20% in the last 5-7 trading sessions.
Vivek, thank you very much for that. Do we have time to just look at the...
All right.
Mike's fallen over, but I've got it back on. I caught it.
You got it just in time, yeah.
Mid-air. But anyway, I think we got market open coming up, and just taking a look at the first rates, which will start to come up any second now. A couple of seconds, actually, just counting down to it. So the Nifty in the pre-open has ended slightly lower. Bank Nifty is down about 200 odd points. We'll see if that buy the dip impulse comes in immediately or not. 0.5% lower, 23,871 on the Nifty. The Nifty Bank is down 0.5, 53,374. The sensex is down 0.65. Small cap index is down about 0.25% or so. 16,500 is where the Nifty small cap index is at. So the Nifty actually is taking, the knocks are a little larger than the mid and small cap indices for now. So 0.6 now lower. That's about 167 odd points. 2:1, but this is right out of the gate, so this will change, but advanced decline is positive. We'll look at this in 10 minutes again. Bajaj, NTPC, Hindalco, that's the Nifty heat map, are higher, beg your pardon, and BEL, Shriram Finance, Ultratech. Everything went up 8-10%, right, on that list, on that board. So you're just seeing some profit booking in some stocks and some continued gains. But I think if you look at it, some of the tech names did not do well yesterday. So there is a bit of a positive color there, flavor there. Otherwise, it was a broadly up and up kind of a day. So you got to see today in the context of that. 23,834 on the Nifty. Rima.
While the benchmark indices have opened with a cut of about 0.7% lower, and the Nifty is now below the 24,000 mark, closer to 23,800, the advanced decline ratio is positive to begin with. And now it's almost pretty much evened out, but you've got 1,200 stocks advancing on the BSE to about 1,200 stocks declining. So at least that for now is holding up. On the way up, it's Bajaj Auto. Sudarshan was just telling us about the BOFA upgrade. So that's keeping the stock fairly resilient. NTPC, where the company has signed a non-binding MOU with a French company to explore cooperation in developing new nuclear power projects in India. So NTPC is now your top gainer. Coal India was under pressure yesterday, but today higher. BEL seeing buying. That's up nearly 0.5%. NTPC, Bajaj Auto, Power Grid, Coal India, Max Healthcare, Hindalco, Tata Steel. These are some of the gainers in the morning on the large cap screen. On the way down, IT is selling off. Apart from the fact that TCS numbers are today post-market hours closer to 4:30 p.m., and that will set the tone for the Q4. Anthropic has released another update. It's called Mythos. It's a new model, and there are significant upgrades. And we'll discuss that in greater detail, but that could be keeping a lid on the sentiment on IT stocks today. So Infosys down nearly 2%, HCL Tech 1.5% lower, TCS is down 0.5%. Adani Ports, Adani Enterprises under pressure. Banks are subdued in trade. The Nifty Banking Index down 0.5%, with large caps like Axis Bank, Kotak Mahindra Bank down like 0.7, 0.8%. And L&T too is giving up some of the gains from yesterday. Along with that, Interglobe Aviation.
Well, that's right. I think there are a couple of stocks that are doing very, very well. KEC, that's one of the top volume gainers. That's on the back of an order win out there. So good move out there. Anthony Waste, they're getting Japan's JFE to buy 25% stake, I think, in one of their projects. So that's why I think that stock as well has got a leg up. That's up close to around 4.5%. Big move out there. JTL Industries, renowned, investor Sunil Singhania backed Abacus, that has gone ahead and bought close to 2.5% stake in the company. JTL Industries, remember a stock, JTL Industries, a stock that's come off drastically from the peak. It's up 5.5%. Volumes are extremely high for the first couple of minutes of trade. We'll have to see whether or not it can hold on to those gains, because yesterday it was up 20% as well. So we'll keep an eye out on that particular name, but big bounce up in trade. Hunasa, that's probably the stock of the morning, up 8.5% to around 9% as we speak. Massive volumes on that name as well. The quarterly update is something that the street liked very much. Now it's up 9.5%. Remember, the stock had lost its way a little bit, and now, in fact, it's bursting away. So good move out there. Precision Camshaft, another stock that's not done much actually in the last many years, but they are into retrofitting, which could come into play given that crude oil crisis continues and EVs will get some kind of focus. So that stock is up 10%. Remember, the last 10 years or so, I don't think the stock has moved at all. It's been around the same price itself. So some winners from the broader markets, and the Nifty as we speak, from being down 165 points, we're now down close to around 75 points. The initial instinct is go ahead and buy the dip, because that's what's made you money. And the Nifty Bank as well cut its losses by 200 points.
100 points of the lows already, Nigel. So, but this is the first 5 minutes, right? So let things, as we get into the next few hours, we'll see. It's still headline watching with regards to what's happening. The ceasefire holds, doesn't hold, etc., etc. All those things. If you're trading, all that stuff, of course, becomes important. KEC is the top volume-led gainer by far, by the way, 7%, 607, 608 on it right now. And actually pretty vibrant bunch of volume-led gainers. Bosch, of course, is a CNBC-TV18 exclusive. Vivek alluded to it again, 2.5% higher. The deal valuation, of course, very attractive compared to the sector valuations, as Vivek had highlighted. Garden Reach is up 2.5%. I think Nigel mentioned Hitachi, Mazgaon Dock. Actually, these defense shipping companies are doing well. Garden Reach and Mazgaon, at least two I can see. Bajaj is up 2.25%. Fact, that is fertilizer, chemical Travancore, right? I mean, that's it's 73. It's up about 7% right now. Godfrey Phillip is up about 3.5%. MTAR Tech, and we'll be speaking with the management a little later, 1.5% higher. Quality Power is up about 5.5%. And so it goes. On the downside, there's not very much meaningful. There's Infosys, which is down 1.75%. I'm looking at more than 1% losses. There's Infi, volume-led. Shriram Finance, which went up 8%, is giving back 2%. There's Adani Ports, I think, which we mentioned. Chola Holdings went up sharply, down 3%. Actually, everything went up sharply yesterday, right? So you got to see that. RPSG Ventures has been an absolute rocket, basically doubling while even before the ceasefire. Actually, if anything, after the ceasefire, it's nothing to do with the ceasefire, but basically, if you look at that timeline of when the markets were in trouble, this doubled on the back of that IPL reported transaction, not for their team, but another team. The high was about almost 1,200. Actually, not quite 1,180 was the high. It's at about $1,000 now. So it's given back 200 rupees after doubling from the lows. Let's bring in Devina Mehra. She's founder, chairperson, and managing director at First Global. Devina, good morning. Great to have you with us here. Thanks very much. So, just your thoughts on what's the shape of things to come, Devina, in your opinion, as we go through this ceasefire and beyond, etc. I mean, are we generally going to be a little bit in a more constructive kind of environment, or still nervous and anxiety-ridden?
Good morning, Prashant, and good morning to your viewers. Very hard to say. I found a very good metaphor. I was listening to Ambassador Javed Ashraf yesterday, and he said that the world has heaved a collective sigh of relief, but maybe we should also be holding our breath because things are not so clear, and it's actually got a little murkier later in the day because you saw the strikes at Lebanon, which I didn't have the stomach to see the videos, but people were telling me that it's pretty horrifying. And also a disconnect. If you looked at what was initially put out as the 15 points from the US side and the 10 points from Iran, they were quite miles apart. And then later on, you had some of the US spokespersons saying these are not the 10 points, obviously, because those were like asking for the maximum possible from Iran's side, including withdrawal of US from all the Gulf states, and also that ceasefire should not just be vis-a-vis Iran, but other regional powers like Lebanon, etc. also. And it wasn't even clear that Israel is part of it. So, I mean, I think there will be some ups and downs on this. And the fact is that the world is worse off than it was on February 27th, when the Straits of Hormuz was still open, and Iran has obviously now discovered that they can charge a toll for everybody who passes through. So, that was not something which they had done in spite of all those decades of sanctions. So let's see how this plays out. But, I have been saying the same thing. In fact, my pinned tweet is dated March 1, where I have spoken about when the hostilities had just broken out. And really the study of the world from the beginning of the 20th century, which includes the two world wars and also all the other wars that the world has seen, Vietnam, Korea, that all the two Gulf wars, which are more recent, and U.S. bombing Libya, all of that. The one takeaway is that there is no point reacting too much to geopolitics unless it is your country which is part of the conflict. So that's like, it's a very clear pattern, and which I have been saying from day one. In fact, I said it even the day the Russia-Ukraine war broke out in February 2022, because we'd actually looked at the data. And we've not found the exceptions. The exceptions are only the countries that are in the conflict and get defeated. That's the only place where the stock exchanges really see a big move. So I don't think, as far as the Indian market is concerned, and so also actually a lot of the other markets, this is going to be the big determinant. Of course, crude still remains a bottleneck. Of course, India is in better terms with Iran, so we've been getting some of our stuff through, and hopefully we continue to do that. And I really hope, for the sake of the world and humanity, that solutions are found and we do not needlessly escalate. Because this escalation was going to come. I mean, even in my January interviews on your sister channel, the Hindi channel, I said exactly that if you hit Iran, you will be hit hard. And I think to some extent, however much people didn't like the Irani regime, they have shown a great deal of resilience and actually have come out of all this looking better, if anything.
Yeah. By the way, there is a tweet. It's only, I just realized, Devina, it's only 9 p.m. in Washington. So I guess, President Trump has tweeted, right? This is 5 minutes back. He says, and I'm just reading this, he says all U.S. ships, aircraft and military personnel with additional ammunition, weaponry and anything else that is appropriate and necessary for the lethal prosecution and destruction of an already substantially degraded enemy will remain in place in and around Iran until such time as the real agreement is reached and is fully complied with. Then he says, if for any reason it is not, which is highly unlikely. So basically he says that it's highly likely that an agreement will be reached. So he's optimistic. But he says, if for any reason it is not, which is highly unlikely, then the shooting starts bigger and better and stronger than anyone has ever seen before. It was agreed a long time ago, and despite all of the fake rhetoric to the contrary, no nuclear weapons, and the Strait of Hormuz will be open and safe. In the meantime, our great military is loading up and resting, looking forward actually to its next conquest. Oh boy. America is back. Followed by...
This was only a 2-week ceasefire. It was not supposed to be the end of the war. I mean, all they announced earlier also was a 2-week ceasefire. The ceasefire means the war is not over. So to that extent, obviously they will not move the military out of that region. That much is obvious. And the rest of it, of course, President Trump has to have this rhetoric of that we'll do something that the world has never seen before, and et cetera, et cetera. That, of course, has to be the end point of
the other. Yeah, the last point, right, is loading up and resting, looking forward actually to its next conquest.
Scary.
I mean,
this is not the kind of rhetoric that. Already there is a lot of distrust, and this doesn't tell you that there's going to be a lot of trust, because Iran's whole point has been that even if we stop now, we need guarantees that US and Israel will not start another aggression. So that's been,
if you take the more optimistic view, even with this tweet, right, this next conquest business, etc. I mean, it's posturing. I mean, in that sense, right?
Of course.
It is posturing, putting pressure. We're all there. We can stop.
Whole lot of things are posturing. Yeah. So as I said, he has to end by saying things like this, that you will see the fury on a scale that nobody has ever seen. That's the way he ends. So.
Yeah.
But as I said, on paper, if it's a ceasefire, it is not the end of the war. I mean, that part is correct, that a signed and sealed agreement has to be the end point.
Yeah, but I mean, it's pretty. It's posturing, but and then I guess everyone gets shocked because you're not used to hearing this kind of stuff from world leaders, and especially the president of the U.S.
Yeah, I mean, his Easter message was the language was, let us say, intemperate. So that is not sort of, and of course, I mean, this morning I was looking at there's a Gallup poll on the how much people, kind of an acceptance or approval rating of various countries around the world, and for the first time, China is ahead of the US, and US is just a little bit ahead of Russia. So this is in terms of the world image, it has not gone well for the US. Whatever has happened in the last year and a bit.
Yeah.
Well, another classic Trump tweet coming through. So, Devina, you were just making the point, right, before we diverted our attention to what Donald Trump had to say, that generally staying invested through the crisis has worked out well. So that's a compelling case for staying invested in the markets, not exiting, not stopping your SIPs. But to make real money, you have to back the winners and leaders, and you need to, every now and then, churn your portfolio to align yourself with the shifting, sands. So in that sense, tell us what you've done with your portfolio in February and March, and now what are the next big trends, the next big opportunities going forward that you're looking at?
In February and March, actually, we've not made huge number of changes. I mean, we've changed some stocks more in February than in March, but because we were overweight pharma, healthcare, auto components, so that's broadly been where we've been overweight about 2 years. So that's not changed very much. And banks, we hold a little more than what we usually hold. In fact, significantly more than what we usually hold, but we're not overweight. And last year, basically, mostly we added PSU banks, and towards the end, we added a few others also. So that pattern has not changed. The rest have been stock picks in areas like capital goods, chemicals, some made some changes in FMCG. So that's broadly been the case. We believe in a fairly diversified portfolio. We do not like huge sector concentrations. So that's broadly been the pattern. We've not made very substantial changes in our global portfolios. Actually, beginning of February itself, before, I mean, this was not a call on that any conflict would break out, but we just thought that crude looked due for a rally. So we were already underweight US equities. We took a bit more out of US equities and put it in commodities, oil and metals. So that was a change that we did early Feb. We've not tinkered with it since. We will be again, I mean, now the new quarter has started, so we will be looking at everything once more, because we look kind of at a zero base rebalance every quarter, that if we had cash today, where would we be? So that's the question we ask ourselves. So we're still there.
Okay. All right. Devina, the big cue today is going to be results, right? TCS kicks off earnings season from the major companies. How are you placed on IT? You know, you look at it from the start of the war. This is one of the indices actually that's outperformed. It got bombed out before that. That could be one of the reasons. But otherwise, you know, the stock price corrections were so steep in the month of February. And some of those, you know, PEs or the earnings yield or the cash flow yield became fairly attractive. And that's why it seems there was some kind of bottom fishing. How are you all positioned on tech? Growth is still going to be very, very meager, but some of these valuations could turn supportive.
Yeah, so IT, I mean, we are, I don't think we are significantly either underweight or overweight. We'd be close to market weight, little more in mid cap than in large cap, but we have the large cap ones also, some of them. And my own feeling has been that this whole thing of that, you know, the sort of the IT, the whole story is coming to an end, has been overdone. And if you look at, it's kind of the obituary of the IT services sector has been called many times, right, from Y2K, digitization, cloud, this, that. And if you look at where AI is, and there was a research paper called Agents of Chaos, you know, if you give kind of the keys to the AI system, you don't even know what, it might just wipe out your entire database, you know. So I mean, whenever the enterprises move to this, they will still need an intermediary to actually do all of it, and also, you know, be responsible for it, because, you know, which CTO wants to just give away the keys. So I think they will be able to pivot their model. The only part is that it may not provide the kind of employment it has done in the past, which is more a macro question than I think an IT services question, because we kind of mix up the two things. So that's been the big driver in the last 25 years, I would say, of India economy and employment, both directly and indirectly. So that's the part, if at all, that's the part that worries me a bit, yeah.
One argument that's being made in favor of the Indian IT companies also is that the global AI theme may slow down because the rising crude gas prices increases the cost of setting up and running data centers. So this entire big tech AI capex, which is supposed to be $600, $650, $700 billion, will that really play out? Will those growth numbers hold out? And if the global AI theme slows down, then the anti-AI theme, that's India, could actually see a bit of a leg up. But Devina, what else? You know,
in terms of AI, I would say, and this is something I think I've spoken about even some months ago on your channel also, that I see a lot of risks in that whole AI story. And you mentioned the $650, $700 billion, which is just what the top 3-4 companies are going to spend, are budgeted to spend. And you go back 3 years, and their capex, total capex used to be $150 billion. It is extremely energy intensive. It is extremely water intensive. Those are not good things. I mean, people talk as if AI will come and suddenly the cost of everything will go to zero. I've seen some, even some senior tech guys saying things like that. I mean, you're not looking at this. AI is not happening in some, in mid-air. It is all happening on the ground. It's a very, very real estate, depreciating assets, the high energy, high water cost. I mean, what are you talking about? And maybe it is a good thing that they will not be able to spend so much, because I do not see the returns coming on a $700 billion outlay anytime soon. And if you look at, I had posted this a couple of days ago, we think that one time that whole tech crash came in that 2000 and post that. But even the survivors of those crash, I mean, in 2008, there was a book written on all the top tech companies, and you see that list, almost everything is gone from there. Even the ones that are around, like TripAdvisor and PayPal, have given 0 to negative returns in the stock market for the past 10 years. I mean, barring one Apple there, I don't see anything which has survived out of that list of a dozen companies which had made it through the tech crash, Yahoo and Lycos and this and that. So, I mean, I have always been very cautious on this whole AI story, and that this is the place to be. So maybe it's not such a bad thing for the tech majors in the world also that this slows down. And as I said, I mean, whether AI comes or not, I see the IT services companies in India will be able to pivot their model. They are good managements in that limited sense. I mean, they are not good managements that they never moved up the sort of value chain in 25 years in spite of hordes of cash. And this is not a recent thing. I've been talking about it for the last 2 decades. But, this part they can manage. I mean, that's my call.
Devina, great chatting with you. Thank you very much for joining in. And the point is taken on IT that the bigger worry for you is on the employment front. Thank you for joining in. Okay, let's move on now to defense now. Driven by rising global defense spend and mounting geopolitical uncertainty, will Indian companies gain a bigger share? To discuss this and the impact of input cost pressures, we're joined by Srinivas Reddy, Managing Director of MTAR Technology, and Ankit Mehta, co-founder and CEO at IdeaForge. And quite diverse moves we've seen in the stock price. Since the start of the year, IdeaForge is down 10%, while MTAR Tech is up close to about 70-odd%. But gentlemen, let me begin by understanding what the order book is. Because at just towards the end of the March, the DSE also cleared proposals worth 2.4 lakh crore rupees. And both of you all have been reporting very strong order accretion, especially in Q3. And you all were confident about that going into the coming quarters as well. So, Mr. Reddy, can you tell us in Q4, what has been the order inflow for the company and what can you guide for FY27? What's in the pipeline?
Q4, we had some substantial orders coming in, but we work with multiple verticals, as you're aware. It's not exactly defense, but we work with multiple sectors. And we have given our guidance very clearly earlier, and we stick to that, and we are on track with that. Close to about 50% revenue growth for next year, in spite of all what's happening right now.
Okay. And you'd said that you expect the order book to reach 2,800 crore by end of FY26. That's happened?
Close to that, I guess. I mean, a few orders got deferred to this quarter, but we are very close to that.
Close to that. And 50% top line growth for FY27. Ankit, you want to come in and help us with how the order inflows have been and what the pipeline's looking like? And will you be profitable in the current quarter?
So, Rima, in terms of results and numbers, I think since our results are not out yet, I won't be able to discuss them in a lot of detail. But I think from the standpoint of what we had said in the last earnings call, I think we are sort of looking at that.
Yeah. By the way, gentlemen, morning. Ankit, good morning. Prashant here. Mr. Reddy, good morning. I must say, Mr. Reddy, you were on this program about in September of last year when you put out that you put out the guidance, 40-50% growth guidance. And I mean, I just happened to look at the stock. It was actually closer to 1,500 that day, and about 4,200 today. So that was the absolute turning point in that sense, if I may say so myself. All right, and I just want a quick run through from both of you with regards to your expectations of defense spending and where that spending will come in. It's of course defense spending, but also making not to spend to import stuff, but to make here in India. Especially given the elevated level of conflict. I think we're at an all-time high if you were to put a graph on and measure, generally conflict or talk of conflict worldwide. Mr. Reddy, why don't you go first, sir? Which are specific areas where you think which are going to be the focal point?
See, there are a lot of areas, but what is most important is the technology that we need to adapt. It's a long drawn process. It's not going to happen overnight, but a lot of companies are working towards it. Some with technology transfer, some are working with joint ventures. But I would say that if you want to bring this on a fast track basis, it should be more on a joint venture basis. And we are also working on a number of projects where we have to indigenize, make in India, whatever we talked about. But that's going to take some time. It's not going to happen overnight, for sure.
Got that. We'll get into details in just a bit, Mr. Reddy. Ankit, drones, of course, right? I think it's become the primary sort of tool, weapon, whatever you want to call it, in Ukraine, in the Middle East, etc., etc. In India, though, the defense procurement, and this is feedback which is a little old, maybe a year old, is that it's kind of ad hoc. You don't have there is not that much visibility on when the procurement happens, what is the size going to be, so it, etc. Has that changed, Ankit? Anything you can tell us?
Yeah, I think, that if there was any doubt that the next set of wars are going to be fought using technology, it is, I think, completely changed now because in time, the nature of use of the technology is changing, but the central fulcrum of the technology is remaining to be leveraging drones. And if you look at the way the color is changing in Ukraine, Russia, the color had shifted towards relatively shorter ranges, let's say 25, 30, 50 kilometer kind of ranges where a lot of low cost solutions were being deployed. But now in the Middle East war, long range solutions are being deployed that can go to a very large distance of even 1,000 kilometers, and even they are low cost. So the cost of attack at any range is reducing significantly, and therefore it is very clear to us that the cost of defense will also have to come down significantly against them because the arbitrage against it today is very, very high. And therefore, there is also going to be need for what a lot of work has happened in Ukraine for that to be a very different design. And the reality is that stockpiling will have to happen. Without that, we will not be able to sustain a very high, you can say, momentum for the country itself. And therefore, it's very clear to us that the procurement is going to happen in very large numbers insofar as drones is concerned. And I think that is something which is very, very visible, and it's very clear from the intent on the ground that we are seeing at this point in time. Even like I had mentioned in the earnings call last time that there are talks of procuring close to 20,000 crores worth of drones. That was the articles that we had seen that time, and it continues to be reinforced in other interactions.
Right. I mean, you can see, right? I mean, I think we're talking about tens of thousands of drones being launched in the Russia-Ukraine thing every month. So that stock has that discussion happened with the government with having reserves and building reserves, because you can't create it overnight, right? So as you said, that stockpiling has to happen.
One procurement cycle in that one sense in EP6 just finished. In late November, early December, or some bit was spilled over to Jan as well, is what I understand. So, we've just finished that cycle. So the new cycle is something that we've started to see approvals of in the Defense Acquisition Board as well. So work is happening in that direction, and we are going to have to look at it, and we're going to have to look at it with advancing the technology and the capability as well, so that we can address and respond to the challenges that we foresee in the next cycle of skirmish or conflict that happens.
All right. Mr. Reddy, I wanted to ask you about exports. I think 70% of your business is exports. Would that be fair?
Yeah, that's right.
Have you faced any kind of logistical issues? Because, that's been at the fore for the last month or so. Any logistical issues or any kind of delays from the customers' end?
Not as of now. I think the routes what they have taken, I think that's on track. I don't think we have any issues as of now.
Okay, all right. But have costs gone up?
Yeah, I mean, certain input costs have gone up marginally because obviously you know about the war, and certain input costs have gone up marginally. But that's something is expected, and we hope things will get resolved and we are back to square one.
You know, Mr. Reddy, it's good to see the kind of growth that you're confident about, and you've been largely confident for majority of the year as well. And I think the path ahead is good with the kind of order book that you have. What about profitability? If you'd give us, an insight into margins, because operating leverage will come into play. Do you think margins can improve? What is the broad range we should work with? And also another point is your working capital continues to remain elevated. Where does that number stabilize at?
So as I said earlier, we are going to probably go to about 24% EBITDA margins. That's the goal, and that's what we're aiming for. And the working capital, obviously, the number of days should come down below 200. That's what we have said, and I think we are on track with that as well.
Right. You know, the other big theme, right, is, Mr. Reddy, energy security. And we talk about coal and renewables, et cetera, but there's also nuclear. And I think there was a flutter of excitement over the last 48 hours after that fast breeder reactor, which opens up the possibility, achieving criticality, which opens the possibility of a thorium-based reactor sometime down the line. It's years away, but I mean, this is an important step. You work with the Nuclear Power Corporation of India in the nuclear field. Could you talk to us a little bit about the opportunity there?
Look, the fast breeder reactor, MTAR has contributed, I would say, close to 70% of the core of the reactor. It was a very long research. It's about a 15 years project, and finally it was very successful, and very happy about it. And there is a lot of opportunity there because we had developed for the first time in India, along with Bhavni, various major assemblies for the core of the reactor. And we are the major contributors for that. And moving forward, let's hope that's the nuclear cycle what India is looking for. And it's very good news that it's achieved criticality a couple of days back. And let's see how it goes. We have come in with some more fast breeder reactors moving forward, which is critical to the nuclear cycle for our country as such, because of the thorium deposits that we have, in huge percentages in India.
What I mean, if you can disclose, Mr. Reddy, what was the value of the work that you did on the fast breeder, the reactor, the prototype?
It's almost like 15 years when the order was given, like a long time back. Probably we did it a very, cost which to support the department at that time. I think it's about 150 to 200 crores at that point of time.
Yeah. Now, the point is, now that this is, the prototype shows it can work, I'm assuming the next step will be to build many of these, right? Because you need uranium-233.
Exactly.
To move to the next step.
That's exactly what it is.
So is that happening now? Has that discussion started with the government?
I mean, they just achieved it, went critical just a couple of days back. So probably they'll take some time to talk about it. But obviously they have those plans in place, which I came to know about a year back itself, that once this goes critical, then they will move on to more number of reactors, and that should happen for sure.
How many you think? I mean, just since you've been involved in this, how many will we need? And just give us a sense.
We need many more, a lot more to complete the nuclear cycle. I don't know the exact number, but we need a lot more. And that's the nuclear cycle that we're looking for. And let's see how it goes. I mean, the budgets have to be approved, and we need to move forward with that.
Right. And if the government came to you and asked you to came to you with one of these reactors, right, which is to be built, and many have to be built, what's the value of the work? I mean, if you were to work on the core and other things, I mean, broadly, roughly, top of the mind.
Probably, if you look at it today and the kind of research we had done earlier, and we did it very low cost for them, and if you look at the cost today, I would say it should be more than about 1,500 crores plus is what we're looking at. It's a rough number. I cannot exactly say that, but more or less in that range.
Okay. If you do the same kind of work that you did earlier, I mean,
exactly.
Which is about, as you said, 70% of the core was done by you.
Yes, that's right.
So 1,500 crore per reactor. And I've seen estimates that you need at least 10, 15, right? And running over a period of time, many years, for us to move to the third stage.
That's true. That's right.
Okay, so it could be a sizable opportunity if the government is committed on this path, and it looks like it is, right?
Yes, the government is 100% committed in this path, and that's been the main goal for Government of India for many years, to achieve the nuclear cycle, and that's what it is. So I don't think that's an issue.
Okay. Got that. It's this is an exciting time, and we'll see. We'll be in touch with you, sir, as you hear from the government, and we take the next step in terms of moving ahead. Ankit and Mr. Reddy, thank you very much, both of you, for joining us. It's a pleasure, and good luck. So we'll take a quick commercial break here. We'll come back. Markets back down to the day's low. So this is the swing that I was talking about earlier. And the potential for negative surprises along the way, headline watching, etc., all back in focus because at yesterday's close, the market had already come up and pricing in a fair bit of optimism that this is a one-line way forward, which is not. 200 points lower, and under 23,800 is where we are at. We come back with Mahesh, MB Mahesh of Kotak Institutional Equities. We talk about what's in store for banks in the fourth quarter. Stay tuned.
Welcome back. Markets have moved to the low point of the day, but par for the course by the kind of rally that we saw yesterday. And still, the globe is a little bit jittery with regard to the ceasefire that has been announced. 200 points low on the Nifty for the time being, holding on to the 23,800 mark. The Nifty Bank is down 600 points. But it's time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, Ritu is joining us to tell us what do we expect from the banking sector in Quarter 4. Over to you, Ritu.
Headline uncertainty but steady core performance is the story for banks this quarter. At the system level, profit growth is expected at about 6 to 7% year-on-year, largely flat sequentially. The net interest income is likely to grow at about 7.4 to 8% year-on-year and 3% quarter-on-quarter. But the divergence within the banks is going to be quite sharp. So private banks on one hand are expected to lead the pack, deliver profit growth of 10 to 10.3% year-on-year and 5 to 6% sequentially. But on the other hand, PSU banks, they're looking at a near flat to negative profit growth, down 1% year-on-year and as much as 10% over the previous quarter. The net interest income is going to be healthy, similar levels, 7% plus growth year-on-year, more than 3% sequentially. But the difference in profitability comes down to one factor. That factor is the G-Sec yield spike. The 10-year ended March at approximately 7%, up 35 basis points quarter on quarter. So margins are going to remain a key pressure point. Net interest margins, in fact, are expected to contract by 2 to 15 basis points over the previous quarter because of the rate cut feeding through the system. Now, on growth, the system-level credit demand is strong, nearly 14%, but deposit growth continues to lag at about 11%, and that has pushed the credit-deposit ratio at an all-time high of 83%, and that is going to keep funding conditions tight. Asset quality, however, is the bright spot. Slippages are expected to come down. Stress in unsecured segments like personal loans, credit cards, microfinance is showing signs of moderation. But that said, there are some risks in the MSMEs and the commercial vehicles, especially with what happened with the West Asia front. There's still some uncertainty about the impact of that. Now, stock-specific commentary from HDFC Bank after the chairman's exit, of course, is going to be very closely looked at. IndusInd Bank's strategy outlook, management changes will remain in focus. IDFC First Bank can see muted profits because of the Haryana branch fraud issue. Federal Bank could get a boost from a one-off tax refund. For AU Small Finance Bank, the universal banking transition timeline, any capital raise is going to be key. And from Yes Bank, SMBC's evolving role and the new CEO taking over and his strategic priorities are going to be the story. So overall, while reported earnings may look subdued in the quarter, the core operating picture remains more or less intact.
Thank you very much, Ritu, for that. MB Mahesh, analyst at Kotak Institutional Equities, is now joining in. Thank you very much for joining in. Before we get to the policy and the possibility that there may not be any rate hikes as was being feared by the market on account of the currency depreciation, etc., we got a lot of Q4 updates, pretty much from most of them, across large banks, PSUs and NBFCs. So just summarize your key takeaways for each of these.
The releases that you get out there is essentially on two data points. One is on the deposit side and on the loan side. On the loan side, the issues on the ground were far lower, at least in the first 2 months of the year. We saw a lot of lenders accelerating their loan portfolios across all segments. So when you look at the RBI data, which came out in the early part of this month, we started seeing growth coming through in the large corporate. We saw decent growth on the SME side, and we also started to see decent acceleration on the credit side as well, on the retail side as well. So when you look at the provisional numbers out there, it just kind of reflects that momentum that went through at least in January and February. So decent numbers across the board, whether it is public banks, whether it is private banks, even when you break up the private banks between the large private and you look at the mid-private, as well as some of the SFBs, the numbers have come out reasonably well on the loan growth side. As highlighted in the earlier part of the conversation here, deposits is a bit of an issue. We do see deposits lagging loan growth at this stage. And a lot of lenders have probably resorted to raising money through the certificate of deposits to fund the balance sheets towards the end of the quarter. And you will probably see them replacing those deposits with either the retail side or slightly longer dated deposits, probably in the first half of this year. So decent numbers, nothing to complain, looking at the headline provisional numbers that have been reported by all the banks at least.
And what about for FY27? I mean, what's done is done. Everyone's looking forward to what lies ahead. So tie that in with, how growth projections have come down to some extent. There is fear about banks turning a bit cautious. But at least on the rate front, looks like there may not be any rate hikes as things stand right now, though the situation is very fluid.
Yeah, Rima, as you say, you'll probably break up the first half in two different ways here. One is, if we see an early resolution to some of the global tensions that we are seeing, that we have seen outside India, there's a fairly high chance that lenders will move back to the same growth rates that they were reporting probably towards the end of Jan-Feb. But if this situation persists for a much longer time, there's a fairly high chance that lenders may to some extent take a pause on the ground. Reassess the situation on the ground, trying to understand what is the impact of it at the borrower level. And also you will probably get a fresh assessment from the borrowers themselves as to whether they want to take credit and consume it, or take credit and build capex around it. So to some extent, I think at this point of time, it is way too early to call in which direction FY27 will at least lead into. But a lot of it, we should have clarity probably in the next 1 or 2 months out there. That's the assessment that we have. And based on that, we should be having a sense of direction as to how FY27 is likely to shape up at least.
Okay, all right. Hi, Mahesh. Good to hear your thoughts. In terms of stock price movement, actually the PSU stocks have done far better. And now, because of that kind of move that we have seen, the valuation gap between private and public sector banks, well, it's narrowed quite a bit. At this juncture, what would your preference be? Do you believe that the PSU still have room to re-rate, or do you think these private sector banks have come down to levels that we've not seen in the past many years? So it's time to get in.
So we are asking investors to get into the large private sector banks today. We have played some of the PSU banks or several of the PSU banks over the last few years now. The valuation differential that we are seeing between private sector banks and public sector banks is now closer to where we saw in 2007, 2008 levels. Does suggest that the PSUs now have to demonstrate something incrementally better to justify a further contraction in premiums at least. On the other hand, when we look at the large private sector banks, several of the banks have had some issues or the other, either pertaining to the liability side or pertaining to the asset side at least. We've seen, at least from the provisional numbers, that some of these issues are probably behind them. It gives us an opportunity for us to relook at the large private sector banks with a fair amount of confidence. Now, having said that, what we still don't know is how things are likely to shape up in terms of competitive intensity between the private sector banks and public sector banks over the next 1-2 years' time. So to some extent, I don't think we have a runaway story of outperformance even with the large private banks. but it is too difficult for us to ignore the valuation discount and the inexpensiveness at which some of the large private sector banks are trading. So to answer it, yes, we are pushing the large private sector banks at this particular stage to our investors at least.
Okay, thank you very much for joining in. Always a pleasure chatting with you. Look forward to more interactions once the actual numbers are out. Let's just get in a quick handle on where the market technicals are and where we are headed. Shilpa Rao, Prabhudas Leeladhar is now joining us on the show. Shilpa, thank you very much for joining in. What trades for today?
Good morning, Nigel, Prashant and Reema, and thank you for having me on the show. Talking about the indices, we see that 23,800 to 23,750 on spot levels will act as a support on intraday basis. If that holds, then you will see a bounce towards 23,900 and above again. Likewise, Bank Nifty, it has a support at around 54,800. Talking about trades, I have one long and one short. The long one would be in metals Vedanta. Vedanta is looking absolutely very strong. 720, 710 zones acting as a good support. So 710 should be a stop loss and you should look for targets of 760 positional little from here. The other one would be a sell in SRF. It is showing some sort of weakness. The resistance is placed at 2460, so that should be a stop loss and look for targets towards 2300 folks.
Thank you very much for joining in. Markets have moved to the day's low, 23,800, nearly 200 points down on the Nifty, with the sensex sinking by nearly 750 points. Eternal is now the top Nifty loser, 2.5% gone. Auto names are under pressure, so M&M, Maruti Suzuki, weak in trade. IT is selling off. Interglobe Aviation, L&T, which were the big winners of yesterday, are in the red now. And HDFC Bank, too, is overall underperforming the Nifty Bank. HDFC Bank is down 1.5%. Get into a break. On the other side, we'll talk more commodities. Manisha Gupta will join in as always. As promised, let's talk commodities and get an update on what's happening there. Manisha joins in as always. Manisha.
Well, thank you for that. The big decline that we saw in the markets yesterday, our biggest weekly decline, by the way, since the month of April in 2020, was pretty short-lived because we've seen the crude oil prices gain up yet again. Not at the kind of levels that we were trading in yesterday morning, but we are back around that $97, $98 per barrel of a mark. We did see a decline all the way up to 93, 92 even for the Brent prices, but there is a sharp increase that came in yesterday itself. And in the Asian markets right now, 2.5% of gain is what we are working with for the Brent prices, and the NYMEX crude is trading on a firmer note as well. Well, three things that have happened overnight that have led the prices to come back. One is there are renewed Israeli strikes on Lebanon that we've seen, something that the 10-point agenda from Iran mentioned on. And then the Strait of Hormuz remains largely obstructed. There are reports suggesting that Iran perhaps could be looking at ships passing through via Oman or closer to Oman on the Strait of Hormuz itself. And then apart from that, the U.S. insists that Iran abandon its nuclear ambitions. Everything that Iran pointed out in that 10-point agenda, clearly 3 or 4 points of those have been violated already. And that's where we're looking at into the markets with doubts about durability of this very fragile ceasefire in West Asia therein. What we do understand is that there is a delegation from U.S. that is going to Islamabad for direct talks with Iran this weekend. So it's going to be a newsy weekend in that sense as well. Today and over the weekend when we hear that meeting actually taking place and the kind of comments that would come in from that. In the meanwhile, you have the spot prices in crude oil, which continue to trade at a record premium at $30 to $40 a barrel. So if you want crude right now, this is what you have to pay over and above what the Brent prices are trading, because this is a 1-month futures and the spot premium actually is highest when you come look at Asian and the European markets therein. The Middle East oil production is down by 13 million barrels per day. That's almost 10 to 12% of the global production. And we are looking at estimates suggesting that the disruptions overall could be impacting nearly 10% of global oil till time and 20% of gas therein as well. There are various reports as well that we see coming in from agencies Kepler, for one, says that the oil production estimates are down by nearly 13 million barrels per day, and it could take 5 months to restore that capacity, even if the war was to end today. There also is a report coming in from Kuwait Petroleum saying that it would take 4 months for Gulf producers to fully restore production. So the crude prices, for that matter, perhaps have given away all the geopolitical premium, and this is the supply disruption concerns that still seem to be finding its way in prices. So when you look at this year till time, this is what we've done in sense of prices. NYMEX is up 70%, 60% of gains in Brent. And then you have way more higher price gains that you've seen for Russia and Urals, up by 140%, 95% of gains for Oman crude in this year till time. And Dubai crude is trading at 96% of gains for 2026.
Thank you very much for that, Manisha. We will get into break. On the other side is our special segment. It's The Economy. Lata will speak with former SBI Chairman Dinesh Khara and AZB's Behram Vakil on the amendments made to the bankruptcy law.